Welcome back to the ETF Inspector. It's Sunday, June 8th, about 3 o'clock in the afternoon making this video. And today's video will be on the week look ahead and distribution or declaration guesstimate for ULTY and LFGY. Those are both weekly paying YieldMax funds. ULTY is the Ultra Option Income Strategy Fund, and LFGY is the Crypto Industry and Tech Portfolio Option Income ETF. We had a nice uptick in subscribers over the last day or two. I know Retire on Dividends mentioned me in a couple videos, told you guys to check me out. So if you're new here, thank you. And obviously always a big thank you to him. He has been, huge help for me getting started. So greatly appreciated. So all we do, very similar to his videos if you watch them, except I'm not as entertaining or funny. So I'm just giving you the information on the different YieldMax funds, some of the different funds that he doesn't cover. So before we get into it, just a real quick, I'm also on X, where I just repost the things that YieldMax does related to declarations, and let you know when my videos are coming out. So at ETF_inspector1. All right, we'll start with ULTY. So we don't need to talk about trades. That was in the most recent video. If you didn't see, right, we saw how all the ULTY and LFGY finished the week on Friday, all the trades, final trades for the week. So that was that video. If you missed it, same thing for if you do the individual income funds, the 7 that I cover. Made a video for that. And for some reason, if you're interested just to see what kind of trades I made this past week, I do one of those on Saturdays. So that's available as well. So this one is specific to ULTY and LFGY. So we're just going to look at the different changes, look at the holdings, look at where the options stand going into the week, so we know what kind of ranges we need it to trade within for us to make the maximum profit. And then we will make a guesstimate on the distribution before switching over to the other fund. So we did have some changes this week. Added some new stocks, took away some stocks, and overall, although in general 30-day IVs have been dropping, so I'd say the majority are dropping, we had a couple increase because they had some wild weeks, like Tesla, for example. And then we also swapped out some lower IV stocks for some higher IV stocks. So that actually is going to help us with our distribution. First one to mention is Applied Digital Corp. Right, that's 144% IV. So that's definitely going to help increase our yield. They have calls sold at $15 and $16. Almost everything. I'll point it out if it's different, but in general, things are going to be out till this coming Friday. So with the stock closing at $13.86, those are 8.2 and 15.4% out of the money. We show color ranges for our in the money, out of the money. So obviously we don't want to sell a call and then it be in the money, because that means we're going to have to pay more to close it out. If it's out of the money, it's going to cost pennies to close out at the end. So yellow would be within 5%, so in our favor, but within 5%, and green would be greater than 5%. If you haven't been following these though, you're not going to have a stock that's got 100% IV that any number's safe. It could jump 30% in a day, but we had to pick something for the numbers, so that's what we chose. Okay, AppLovin, another new one, stock ticker APP. And even if I don't read every single statistic, right, you can see it if you froze your screen. It's contracts if it's talking about options. It's shares, obviously, if it's just talking about the stock. So you can see 700,000 shares, 5,000 contracts, right? And then total market value here. So basically, if you sell a call, it's going to show up looking like a negative. You're going to take in the cash for it, and then it's going to show as a negative because you have to buy to close it at the end. That's not specific for every single situation on options, but the way they operate this, they don't let anything go to expiration. They're going to close every trade. They're not going to let things get assigned. So they roll every week. So it's really a wash. So let's say they did this today, sold a $15 strike, 5,000 contracts at 80 cents a piece. They'd increase their value by 400,000 from cash taken in, and then they would have a negative 400,000 line item here, so it looks even. Now, as the stock moves on and time decays, and that premium drops, the cost to buy it back will drop, and that's where the money will be made, profited at the end of the day. So, okay, so AppLovin is a 70% 30-day IV. So another one that's helped increase, right? We've got $12.5 million in them. A single strike chosen for their 300 contracts at 450 with the stock sitting at 417.89. Those are 7.6% out of the money. ASTS, we've been in them for a little while now, an 85+% 30-day IV. And this number next to it is the weighting or the percentage. That's that stock compared out of all the stocks within it. So Applied is 2.49%, AppLovin is 3.2%. So we'll go through. We don't need to read them off every line though. So $29.50 is the call strike price sold for ASTS. Unfortunately, they closed on Friday at $31.19. So these are actually 5% in the money. We'll see if they close them out early in the week. I would guess if it goes up more, it's looking like it's going to want to run, they'll close it out. If it's kind of flat or coming down, they'll let it go, let time decay, and let these the premium come down so they can buy them back for cheaper. Coinbase, 51% 30-day IV, 46,000 shares, 460 contracts sold at $260 with a Friday close at $251. Those are about 3.5% out of the money. So basically, all these call strike prices that I'm going to read to you, that's the price we want the stock to end the week below. And really, we don't really want it to run past it during the week because they'll probably end up closing them out to protect themselves. And again, just in case people are new, they do operate on a collar strategy. That's where they own the shares, they sell calls, and then they buy puts. Selling the call is trying to make premium. Buying the put is protecting the shares themselves because they're not going to let the shares go. So if they lose value, they will make value on the puts. That's how it's being protected. CoreWeave, another nice high 130% on the IV. They have evenly spaced 600 contracts at both 160 and 170. Those are 14 and 21% out of the money, so we like that. Those look like they have got good potential to be winners for the week. First Solar, 63% IV. Single strike price 175 with 166 as the closing price on Friday. They're 5.2% out of the money. FTAI Aviation Limited, 57.5% IV. All 900 contracts are sold at 131 with a 129 closing on Friday. They're only 1.4% out of the money. GameStop, 77.6% IV. We have 300,000 shares of them with 3,000 contracts sold at $33 with $29.58 being the closing on Friday. Those are 11.5% out of the money. Hims and Hers, stock ticker is HIMS. They're 91.5% IV. They are spaced out most at 58, calls at 58, but they also have decent amount at 60. Those are 2.9, almost 3% and 6.5% out of the money, with the stock closing on Friday at 56.33. Robinhood, one of the bigger weightings, 5.18. Let's see what's bigger than Robinhood. It's actually our biggest right now. So don't be surprised too. Usually if one goes up too much and starts pulling away and being too heavily weighted, they'll just sell some of the shares and buy into something else just to kind of reallocate funds. So they're 73% IV. We have calls sold at 83 and 84, obviously with the majority at 83 there, about 4 times as many. They are, oh, missed my coloring. 10.8 and 12.18% out of the money right now. That's a nice way to go into the week. 74.88 is where it closed. IonQ has an 88.5% 30-day IV. That's because they had a wild past 2 weeks. The majority of the contracts calls are sold at 41, with a smaller amount at 43. They're 5 and 10% out of the money. This is a new one, LabU. These are a triple leveraged S&P Biotech Bull fund, and then we're selling calls off of them. So 64 was the price they chose. Stocks ended on Friday at $60.42. So our calls are 5.9% out of the money. Mara, 69.50 percentage-wise on the 30-day IV. We have 750,000 shares. All calls sold at $16.50. That's 4.56% out of the money after closing on Friday at $15.78. MicroStrategy is a 53.6% IV. I know if you follow Misty, right, the distributions are kind of shrinking because the IV of it's shrinking. So that's how they come up with how much they try to pay out, right? That's what these YieldMax funds do. So they've got $387.50 as the strike price on the calls. They're 3.5% roughly out of the money with the $374 close on Friday. That's a little scary. I mean, if you've been watching MicroStrategy, they run into the low fours pretty easily lately, the last couple of weeks. So we will see. But I mean, you want to sell them close to the money to collect more premium, but you want to sell them further away from the money to have the higher winning percentage. So you kind of got to pick your happy medium to hit it perfect. I like banking that the professionals will do better at that selection than I will. So NVIDIA been steadily dropping on their IV. They're becoming less and less volatile. 36% IV. We've got calls sold at 145 with a close on Friday at 141.72. So they are only 2.3% out of the money. Oklo, 97.5% IV. So that's nice and high. Still want them to buy 100 more shares. If you're watching, please buy 100 more shares, just so this isn't even 3,000 contracts. Every time I see it, I mean, I'm used to it now, but I would always think that it got broken up. Like, why is there 2,999 contracts? But they've got $53 strike price on their calls that are 5.39% out of the money. Oracle's another fairly new one. We've only had it for a couple of days. 44.3% IV. 177.50 is the call strike price that we wanted to stay under, and those are only 2% out of the money. Palantir, 56% IV. Roughly even split with calls at 128 and 130. Ended at 127.72. So, I mean, these are only 28 cents out of the money. That's not great. 0.2 and 1.79%. So if Palantir has any kind of a good week, we're losing money on these trades. Reddit, 68.9% IV. Small portion of the contracts are sold at 123, with 3 times as many at 125. So we'd like it to stay under 123, but definitely want it under 125 to win for the week. Stock ended at 121.29, so those are 1.4 and 3.0% out of the money. Getting close to the end of ULTY. Rigetti, 88.6% IV. We have 1 million shares, so 10,000 contracts, all sold at $12.50. They're 10.82% out of the money. RH, a 94.7% IV. All calls sold at 200. Those are 9% out of the money, with 183.47 being the close on Friday. SMCI's got a 67% 30-day IV. We have 2,700 contracts sold at 44. Those are another mistake on my part. That should be green. 5.9% out of the money. Tempus, this is another new one, AI company, Tempus AI Inc. They're 83% IV. We have 1,600 contracts, calls sold at 67. Those are almost 8% out of the money. TNA, this is our triple leveraged small cap bulls, 61.5% IV. So that should tell you something, right? We've got triple leverage funds here that have 61 and 52% IVs, and then we've got stocks in here that have literally more than double the IV. So to be twice as volatile as a 3 times leveraged fund is pretty crazy. But we've got 4,000 contracts sold at the call strike of 33. Those are only 3.38% out of the money. Similarly, TQQQ, we just talked about their IV. 2,450 contracts sold at 76. Those are 2.4% out of the money. And those terms sound funny. So if you're not, you don't talk options all the time, you would think you want to be in the money. So, but if you sell something, if it ends out of the money, then you get to buy it back for practically nothing. If it becomes more valuable after you sold it, you have to buy it back for more than you sold it for. So the idea is you want things to become worthless after you sell them because you got to buy them back. So Tesla had a wild week after Elon and Trump got in a fight. So their volatility was one of the few that went up, 68.1%. We've got calls sold at 315 and 320, with the majority of them being at 320. Those are 6.7 and 8.4% out of the money. Now we also have lines here for UNH. They don't get their gray line because we don't own any shares of UNH. They just have this put spread sold on them. So they're the one that matters. They sold the 305. So that's the one that's going to cost to close out, and it is currently in the money because the stock fell below that. Now, puts being opposite of calls, the stock ended at 303.22, so those are 0.59% in the money. So we need UNH to go up a little bit. Upstart has a 67.1% 30-day IV. Let's see, we've got calls sold a little over twice as many at 54 than we have at 58. The 54s are already in the money by 0.6% or 33 cents. And the 58s are still 6.7% out of the money. So we would like them to drop 33 cents this week to make the most profit. Vertiv Holdings has a nearly 50% IV. We have 720 contracts sold at 121, with the stock closing at 115.36. They're close to 5% out of the money. And finally, Vistra Corp, 51.7% IV. 700 contracts sold at 177.50. They are 2.23% out of the money. The fund is just continually growing. Huge increase in the outstanding shares on Friday, bringing us up to 66,700,000. The NAV and the closing price, as usual, within a couple cents of each other. And the fund is now well over $400 million value. All those weightings in the IV make it a 73.03% weighted average on the 30-day IV. So when that goes up, that increases our distribution because you basically multiply that by the closing price on Friday and then divide by 52 to get your IV estimate. Okay, we won't go into the trades because we talked about them all week, but just to show you how many trades, this is just last week, Monday to Friday. Every line item is a buy or sell. So this is everything we had to download each day, crunch the numbers, run them through formulas. And what we come out with wasn't a great week. Okay, top line is trading, and they lost $1.5 million trading. So as far as the income side of it, them paying out what they made us, well, they lost 2 cents a share. So they're not going to send you a bill for 2 cents. So that one kind of gets thrown out. But the nice thing is they don't just pay us based off what they made. They try to achieve their yield matching the 30-day IV of the underlying stocks. So when we do that math, it comes out to be about 8.67 cents. Okay. Now last week, the estimate came out to be roughly around 8.5, and they still paid us almost 9.5 cents. So, and so obviously they lost money on their trades, but they made, I don't want to say made money, because you only make money on your value going up if you sell the shares themselves, but the value went up by almost $15 million. So the value goes up by $15 million. They also collected brought in a ton more money with everybody buying into the fund. So I don't think they're going to pay us the minimum, but with losing money, I don't think they're going to pay us a whole lot more than the maximum. So my guesstimate's 9 cents. I wouldn't be surprised if they stick closer to the 9.5 or even pay more, since the IV went up some. But that's my guesstimate. Okay, so on Wednesday we'll put in what the actual was. We'll see percentage-wise how far I was off. Not that it matters. All right. We're 20 minutes in and we're only at the halfway point. Try to go a little faster for LFGY. And stick around till the end. I gotta, as every video, I end with a dad joke out of the dad joke calendar my kids got me. All right, so LFGY, there's a good bit less stocks. As you can see, there's 29 now, or 30 actually, being traded in ULTY. There's much less over here in LFGY. So let's get started. BitDeer has a 94.7% IV. These are all updated after everything closed out and the week finished. So different strategy, though, I'll point out. They own the shares in this one, just like they do in ULTY, which, if you're familiar, they don't buy the shares in any of the individual income strategies. Like, let's say, for MicroStrategy or Netflix, they don't own a single share of MicroStrategy or Netflix. They create a synthetic position. So in these couple of weekly ones, they do own the shares, and then they try to make money from selling calls off of them. And then sometimes they try to protect themselves. Other times they leave it wide open. They're not considered naked, though, calls that they're selling, though, because they do have the shares. So the shares could just get called away, but they're just not going to let them. They'll pay to close things out. And if you watch any of the interviews with the fund managers, they talk about the different clearing houses and the requirements for money that they have to keep on hand, so that they, trust that they'll always pay and close things out. Okay, so BitDeer has their calls sold for $14.50, 3,439. So not clean numbers on this side, right? They just have random numbers of shares on everything. But for the most part, maybe even every time, they sell the maximum amount of calls or options that they can. So 3,439 contracts sold at $14.50. Stock ended at $13.99, so those are 3.65% out of the money. Clean Spark, I was trying to figure out why everything fit in the last page but not in this one. But with this one, these guys buy and sell the shares a whole lot more often. I'm sorry, keep burping. So I need this column, the QSIP column, to help me, because it doesn't tell me the names, it tells me the numbers, and I have to fill in the names. So you're going to have to bear with me sliding back and forth. Clean Spark, 75.6% IV. We've got 10.50 as our call strike price, and they've got like a call spread here, so they protect it with a purchased call further out to limit their loss to be at $1 per share. Worst case scenario, obviously we want it to end under 10.50, so there's no loss per share, there's a gain. But they're 7.25% out of the money. We really don't need to see over here on the close, because since this is the weekend, I've updated everything so the close matches this close as well. Coinbase. So in this one, I want to say Coinbase is the largest holding by a lot. Yeah, Coinbase is a 12% of the of the overall holding, with MSTR being over 10% and IBIT being 9%. But that makes sense, right? Because this is a heavily crypto fund. So Coinbase 51%, IV 615 contracts sold at 265. Stock currently at 251, so those are about 5.5% out of the money. Core Scientific is a 75.4%. IV $13 call strike price, 5,800 contracts. They're 6.6% out of the money. Galaxy Digital. See, we're not worried about the First American Government Obligations Funds. It's just basically where they keep their spare cash, spare money, similar to like holding stuff in the treasuries. Galaxy's got an 86.4% IV, on the lower end weight-wise for holdings. They have 105,000 shares, so 1,050 contracts sold at 25, with the stock ending at 1998. Those are 25% out of the money. Unless they have a big early day, I wouldn't be surprised if they actually close these and sell closer to the money to collect more premium. GameStop 77.6% on the IV, $33.50 selected for the call strike, 1,800 contracts. They are 13.25% out of the money. Robinhood's got 73%. So some of these funds overlap, right? We talked about GameStop and Robinhood. Obviously different numbers and different strikes chosen. $84 selected there. Stock is at just under 75, so they're 12% out of the money. Hut 8 Corp has an 84.3% IV. They have $20 selected as their call strike price, 3,671 contracts. They're 7.7% out of the money. IBIT, right, the iShares Bitcoin Trust ETF, they don't do options here, so a large percentage here is just in this ETF. They've got 202,000 shares at $59.26, worth $12 million, or like we said, 9% of the fund. Mara, 69.5% IV. Yep. They've got $17 selected as their call strike, with $15.78 be the Friday close. That's 7.73%. And now, similar to UNH, United Health, over in ULTY, they trade MBTX without owning any shares. So we don't have an IV. We don't have a weighting because they don't own any shares. So this is just an individual, just a standalone call spread. So they've got 260 as their call strike for sales, and it's 5.3% out of the money, with the stock ending at 246.87. Mercado Libre, or MELI. This is the highest priced stock at around $2,500 per share. Fairly low volatility, 31.1%. They do a call spread on that, but it's a pretty large gap, right? $25.50 is their sale and $26.30 is their purchase. So there's an $80 per share possibility that they can lose maximum. 22 contracts sold at the $25.50. They're 2.7% out of the money. MicroStrategy, 53.6% IV. So they've got 36,000 plus contracts. They sell basically even split, 183 to 181. Both sales, no insurance, no protection. 395 and 397.50. They're 5.4 and 6.1% out of the money. Stock closed at 374.47 on Friday. Getting close to the bottom. NU Holdings, 34.2% IV. Odd number of shares there. Well, technically it's even. $12.50 is the call strike price. Ended at $12.15. So they're 2.88% out of the money, but they only cost 9 cents to close, so I don't know that they'll let them run the whole week. Nvidia, 36.1% IV. 243 contracts at 146. Those are 3% out of the money, with the stock ending at 141.72. Opera, this is one of the ones that had a June 20th expiration date, so these don't really fall into this week, but they're 39.6% IV. 20 is the strike price on the 2,861 contracts. They're 5.37% out of the money, but again, these go out till the following week. I might have to scroll back up because there might have been another one that was a 620. PayPal, another low one, 28.6% IV. I'm kind of surprised they trade this one at that point. It's getting pretty low, but $75 strike price. Stock's at 73.43, so they are only 2% out of the money. Riot Platforms, 75.2% IV. They have a call spread, you can see. $11 is the sold. That's why it's got a negative number next to the contracts. 6,094 of them. Stock's at 985 as of close on Friday. Those are 11.6% out of the money. Tesla, 68.1% IV. Again, 337.50 is the call strike price. They have 177 contracts, and those are 14.35% out of the money. If the video wasn't so long, I would kind of like to look and compare all the overlapping stocks. If they, did they choose the same call strike price in each one and the same protection, if any, or are the fund managers even talking, or do they do different things with different strategies? Finally, Block, 42.3% IV. They have 48,000-ish shares. For some reason, they sold 11 contracts at 66 and 473 contracts at 67. Basically $65 is what it's currently at, so they're 1.5% and 3% out of the money. Let's take a look. They ended at 39.87 on Friday, and the updated 30-day weighted average of all the stocks combined is 59.15. There's 3.2 million outstanding shares. Pretty decent difference here between the NAV and the price. Every once in a while, let me see if I still have this file open. I don't want to waste time looking it up. Every once in a while, like, their numbers get a little odd. You can literally copy and paste an entire column of numbers and then sum it up, and it doesn't equal the same sum that they say. So there's a possibility that could be the issue. But generally, you're not seeing, almost 50-cent difference between the NAV and the closing price. So we will see. Either there's outstanding shares decrease, which would bring up, right, if you divide by a smaller number, that's going to increase your answer, or the net assets is higher than what we're showing, but I only have access to the information they're given, so this is the most recent information. But so let's go over to the trades. So here's all the trades. Again, we won't go through them, but just so you get an idea, we start at line 364. Every line's a trade. Let's see how many we did this week. 562. So almost 200 trades that we processed throughout the week. It was an odd week. And I still, same thing. I find it very strange that there was a 0 trade day on Wednesday for LFGY. I downloaded it and got tons of other trades off of it. So unless they updated it again much later, I don't know. Maybe if anybody else downloads them and saw trades on Wednesday, let me know. But I have what I have. So they made a little bit of money Monday, a little bit Tuesday. No trades Wednesday. Obviously wiped out everything and then some with losses on Thursday, and then took a beating on Friday. So 1.3 million loss. So overall lost 1.6 million. Similar, I think we said $1.5 million loss over on ULTY. But losing $1.5 million on 126 million hurts worse than losing $1.5 million on 400 million. But so, as you can see, taking that loss divided by the number of shares would bring us to a negative 51 cents per share. Again, they're not going to send you a bill. So we also look at the IV because that's what they shoot for, trying to pay, and we multiply the weighted average of the 30-day IV for all the stocks by the closing price on Friday divided by 52 weeks. And we come up with 45.35 cents. They did make 6 million, not make, I said it last time too. They went up in value by over $6 million because, and that's basically the only way you're going to lose your trades is if the stocks go up too fast. So the stocks went up quick. They went up in value 6 million, causing them to lose or realize losses of 1.6 million. So I think they're going to basically pay us the IV. My guess is 45 cents. So again, on Wednesday, they'll announce it. We'll put it in there and we'll find out how far off I was percentage-wise. So, all right, we're 36 minutes in. Let's go ahead and wrap this up. Dad joke of the day. So before I do, just thank you if you stuck around this long. I appreciate it. Thanks for watching. Hope you're getting all the information you want. Not a lot of things you can put your money in and see dollar for dollar how it's working to make you money like this, how you can follow it, see how things are doing to make your financial investment decisions. So I think these funds are pretty interesting. So if you do too, you're a nerd that likes to crunch numbers like me, hope you liked it. If not, let me know what you'd like to see different. If you're not a subscriber already, please click the subscribe button. For all the new people coming over from Rod, or all the old people coming over from Rod, I feel like 90% of the people here are here from him. So I appreciate you. So with that, dad joke of the day. If you see a robbery at an Apple store, does that make you an eyewitness? You kind of got to read that one, right? Because you see the eyewitness, like iPhone, iPad. Anyway, if you got to explain the joke, it's not that funny. All right. Good luck trading this week. Hope you have a nice end to your weekend, and catch you in the next video on Monday.